Safaricom released financial results for the half-year ended 30th September 2020, which saw net profit decrease by 6%, making this the company's first profit slide since 2012. Now, earlier on, my colleague Arnold Kwizera spoke to Peter Ndegwa, the CEO of Safaricom, for more.
There's no question that we are living in unprecedented times, but I think our results in H1 demonstrated that Safaricom is a resilient business in a disruptive period. Yes, you're right, we reported a 4.8% decline in service revenue and a decline of 6% on an underlying basis in terms of profit after tax. But that's just half the story. There were two elements that impacted our performance in H1. The first is, as we went into lockdown in early April, our business, given its size and its stature in Kenya, was committed to supporting this country, to supporting Kenya during the period. So we offered a lot of support, both to reduce the incidence of the COVID infection, to increase the use of cash, the cashless, with M-Pesa, with giving M-Pesa free transfers below 1,000. We offered bandwidth, free bandwidth to our home customers to encourage working from home, but also learning from home, and lots of other support. Of course, that had a cost. We were happy with that cost. Overall, we quantified that the cost in H1 of all that support, especially the free M-Pesa transfers, was about 10 billion. The second, of course, the second impact on our results is, of course, the economic impact of the shutdown. We saw a slowdown in Q1. In particular, our voice business was affected with a higher decline in Q1 versus Q2. We saw that recover in Q2. We are very pleased with recovery of our business across all parameters in terms of customer numbers, in terms of usage, in terms of level of activity in Q2. So generally, we are happy with the underlying results that we delivered in H1.
Great that you hint on the reduction in Q1 and Q2 of the voice. They're going to about 6.5%. But predictions, and many feel like this has the COVID-19 pandemic has accelerated it. You were already moving away from relying on voice as your primary source of revenue and looking at other alternatives like data. Could this actually be the permanent way going forward?
Yes, you're right. The trend that we had seen the previous year with voice, which is a mature business, starting to decline low to mid single digit, accelerated, especially in Q1. We saw that recover in Q2 with a lot more activity. We delivered what we call customer value management, which is about targeting individual customers with better propositions, which was successful. So we saw the decline slow down in Q2. But you are right. Our intention is to continue to protect voice, but in future, really accelerate and democratize data. We saw very solid growth in data of 14% in H1 on mobile, and we saw a 47% growth in data on the home side as we encouraged, we doubled bandwidth in home so that we could encourage working and learning from home. So at the end of H1, we saw the increase in data, although data is a smaller business, we saw the growth in data in absolute terms, net of the decline in voice, which is a great indication that going forward, we can be able to have a GSM business that's still in growth despite the maturity of the voice business. The second thing that is important to note is the underlying customer numbers went up. The minutes of use, even on voice, went up, but it is the rate that we charged customers that went down. So it's not the level of activity, it's not the number of customers. It is simply the rate that went down. On the data side, we saw improvement across all KPIs, including earnings per customer, continue to go up. We see a huge opportunity on data. We accelerated rollout of 4G. We will have 4G coverage, 100% 4G coverage in Kenya by the end of this year. However, now we are focusing on getting 4G-enabled phones in the hands of customers. This year, especially during COVID, we launched a breakthrough initiative, which is a pay-as-you-go financing program that allows 2G customers upgrade to 4G. In Kenya, we have less than 20% penetration of 4G-enabled phones. We want to move that to 80% in the next 5 years. And that will really allow us to democratize data because we believe that is the future.
Just for clarity for your shareholders that may be watching us, despite the drop in revenue, you still were profitable.
Yes, I talked at the beginning about demonstrating resilience in a disruptive period. Although we declined in revenue, the main cause of the decline is because of the free P2P transactions that we offered for our M-Pesa customers to encourage cashless and to cushion customers during the lockdown period. That cost us approximately 9 billion shillings. Our GSM business was largely flat in the period. The voice decline compensated with the data growth. We are really pleased with the underlying health of the M-Pesa business. During COVID, we added 2 million customers, 30-day active customers. We saw an increase in number of transactions per customer, even if it means some of those transactions were free because of the free P2P. So although we declined during the period, part of the reason why we declined beyond the economic impact of COVID was because we offered free transactions, which was an important element to that. The second thing is we saw we started to launch a number of innovative products for our SME and micro SME customers, so that we could enable them to come back and actually recover from the COVID, from the impact. SMEs are about 40% of the Kenyan economy and contribute 80% of employment. They were the worst hit during this crisis, so we are focusing on them so that we can support their recovery. So the other aspect that I should say, we continue to invest to accelerate rollout of infrastructure. Our capex increased by 22%, mostly 4G sites, but also to promote the use of data, but also the upgrade of M-Pesa from what we call R4 to R6 to improve user experience. And in addition to that, we also reduced our operating expenses by 6 points, which was about growing the top line, continuing to invest, but being shrewd in the way that we manage costs so that we can still continue to deliver consistent growth in shareholder value.
Talking about those increased investments, when you look at your capital expenditure, it almost hit almost 26% there. Why the need to increase expenditure at a time when many players or many blue chip companies on the Nairobi Securities Exchange seem to be scaling back in the wake of the pandemic?
Yeah, that's a good question. It was a deliberate intention for us to accelerate rollout of 4G enabled sites because we knew that the future is data. And as COVID hit, we saw the growth in data. We've seen huge acceleration in demand for data. I have talked about the need to also back that with the increase in number of 4G enabled handsets. The intention is not necessarily to spend much more investment this year versus last year. It is we phased a lot of that investment in H1, so we are going to slow it down in H2 because we wanted to have the investment in before December, so that customers during this period can enjoy the benefit of having a data network, which 4G a data network. So it was a deliberate intention. It doesn't compromise our ability to deliver our guidance in terms of our capex spend, which we've guided between 35 and 38 billion Kenya shillings. It is still in line with our historical spend and will allow us to have the level of capex intensity that is in line with what our shareholders expect.
Peter, great that you've kept bringing up M-Pesa. Now, the Central Bank of Kenya late last week came out with a statement there where they said they may increase the time period for the free P2P payments or money transfers there as a result of the pandemic. Now, the first time the decision you felt, or players in the industry like yourself came out and said we were not consulted, you are asking to be brought onto the table as well as these decisions are made. They're saying they're extending this period. Does it affect you?
Yeah, Arnold, the way I would give the history of this. So in March, we volunteered to offer free transactions. It was supposed to be initially for a period of 3 months. It was extended for another period of 6 months to the end of December. We've been having conversations with the central bank, which I can't go into at this stage because they are confidential. We believe that we'll get to a good place between us and the regulator, and we will manage our business so that we balance between supporting the country and ensuring that we also deliver the level of performance that we need to. That's all I would like to say at this stage, just to say that we have a great relationship with the central bank. We continue to have conversations about this matter, and I'm sure we will get to a place where we balance the two.
Peter, just as the biggest company in Kenya, and correct me if I'm wrong there, SMEs, you are largely responsible for financial inclusion and support of most of the small and medium enterprises in the country. Now, Kenya largely is dependent as an economy on those small and medium enterprises. An extra grace period, one would feel, shouldn't hurt you. Another extra grace period of about 6 months. Why, for a decision where other economic experts and other agencies, World Bank, IMF, are coming out to say, like, you can afford to do this while still staying profitable. Why isn't it such an easy decision?
Arnold, I think it's important to put this in context. So we've been supporting the country for a long time. Our intention was to make sure that we support the country. We are an essential service. We ensure our network is right. We put investment to upgrade that infrastructure to support the additional usage on the GSM side. On the M-Pesa side, you're right that we've been supporting with free transactions. On the SME, I should say, on the SME, we have innovated a lot to help SME recover from the crisis. We've launched a number of innovative products so that it gives control to SMEs. It allows SMEs to come back. You're right, SMEs contribute 40% to the GDP and 80% of employment. And it's our intention to work with partners such as banks, and we are continuing to have conversations with banks on how best to support SMEs in a way that allows them to access credit, that allows them to access connectivity services, but also allows them more broadly to access a payment platform that's versatile. So recently we launched what we call a transacting till, which allows SMEs or merchants to use their till, not just for payments, but not just for receiving payments, but also to pay salaries, to pay suppliers. So we've broadened our offering for SMEs.